All right, so good morning, everybody. This is Michelle Landsverk. Welcome to the Thief River Falls Strong webinar. Today we are talking about what-if scenarios, and what-if scenarios are really all about improving decision-making and reducing risk, both of which have an impact on the bottom line. And it helps you to make the right decision at the right time and maybe see what those potential things are that you can do to reduce your risk and increase your chances of staying strong as we go further into this year. So we do have a few people still coming in. I would just remind you, maybe mute yourself. I am hearing a little bit of background noise, not too bad, but if you could mute yourself, that would be awesome. That will allow for everybody to have better quality audio. I'm going to give a few examples of how you can do what-if planning, and it's really about creating different financial projections. That's really what we're talking about, like best case, worst case, and maybe something in between, and with different variables. So I'm going to be presenting this morning. My background, I've been a business and economic development consultant for 15 years, and now for the last couple of years I've been working with the Thief River Falls area as director of Advanced Thief River. Many of you know that, but there might be a couple on the webinar this morning that do not know that. So, so I do have that connection and strong presence in the Thief River Falls area. I'm admitting another person here. And prior to that, I was director of the Minnesota Women's Business Center. It was very similar to the Small Business Development Center. We have service to women in business, similar to the Small Business Development Center, but the focus was on women. Prior to that, I owned a retail store in Boston for about 10 years. So I've had direct experience as a business owner, and my heart and passion really is with helping businesses. I think they are really the components of our successful economy. So, excited to share this information with you this morning. So when we talk about what-if planning, let's see if I can advance the slide. So my objectives this morning are to, we'll talk about how you assess your current situation and create a new forecast, develop a new business model potentially, create a plan to maintain your business through the crisis, and create a plan for recovery. So when we talk about assessing your current situation and creating a new forecast, that's not always easy. The first thing I would say, make an honest assessment of where things are at today and what you think the future might look like in 3 months, 6 months, and a year from now. So, how do you do that? How do you make that honest assessment? Well, you know what's happening in your business today. But let's just imagine that you can talk, my slides aren't advancing here. Okay, so you might want to call your biggest customer or customers. What does their future look like? So particularly if you're a business that maybe has 3, 4, 5, 6, 10 larger customers, you might just pick up the phone and call them and just touch base. That's never a bad idea anyway. But call them and say, what do you see in the future? Another thing, what has happened to your current sales? So you know kind of where that's at. And again, what does the future look like for your customers? Maybe you are, maybe you're a retail business and you've got a lot of customers, the general public, but obviously their buying patterns have changed. What does that potentially look like moving forward? So just trying to put yourself in the shoes of your customer. All right, having a little lag with my slides here, so pardon me. Okay, so don't worry about the details. Just forecast your best guess. You know, there's really not a right or a wrong here. Just do your best to think about what that might look like. And when we get a little further into the details of this, you'll see areas where you can make some different, use some different variables. So once you've created a forecast, then you'll know what potentially your financial gap will be. And that's really the primary reason that we want to do this. We want to understand, are we going to have a gap? You know, when you're in business, cash is king. You have to have cash to keep your business viable, to keep going. So if there's going to be a cash shortfall, you need to understand maybe how large that shortfall is. And then you can take steps to address that. But until you know what that is or have some idea of it, it's hard to know what that shortfall might be. You might need a new business model. You know, what do we mean by that? Okay, maybe, you know, maybe you're a retail business and you've never sold online before, but maybe selling online would be a way for you to bring in a new revenue stream, and that would be a new business model for you. Maybe you're a restaurant and you're gonna start doing boxed lunches, something like that. So those would be something, you know, a different business model. You can also think about piggybacking off of industries that are thriving in the current recession. So Zoom is one that's thriving. You know, everybody's doing things virtually and online. So that's just one example, but there are other businesses that are maybe doing very well right now. So is there some way that you can piggyback off of what they're doing or work in tandem in a way to complement each other? All right, so then creating a plan to maintain your business through the crisis with a revised sales forecast and possibly a new business model, then you can start fleshing out those financial projections and focusing on your expenses and your cash. So looking at the expenses, what is it that you can cut? Is there anything you can cut? You know, certain things are fixed expenses. Those you can't cut. Like if you've got a rent payment for your space, or well, there's utilities. I mean, there's certain things you have to pay, but then there are variables. You know, there are variable expenses that you can cut. So looking at those, what can you cut? Then can you negotiate expenses with vendors or get better payment terms? You know, that might be something. And right now there's a lot of that happening. There's a lot of vendors that have extended different options. And well, this isn't really expenses, but just, you know, with my cell phone, they're offering more data just as a courtesy to their customers. So there's a lot of companies that work with businesses that are offering some extras right now to kind of help a little bit. And then how can you make your cash last as long as possible? A cash flow forecast really is key to understanding your future. And as I said, cash is king. You need to understand and get a grip on that cash. So creating a plan for recovery, we know things will return to normal. Now, the normal might be a little bit different. There are unknowns, and I don't think any of us really knows exactly what that new normal might look like, but we are going to get back to what we consider a normal place. The health crisis is going to end. We're going to get out of this economic uncertainty. And so as businesses, we want to be ready for when things start trending back up and thinking about those long-term, that long-term play, so you can take advantage when things start bouncing back. So how to create those what-if scenarios, those multiple projections. There's a few tools that I really like. One is called Live Plan. It's by a company, Palo Alto, which is out in California. They used to have a product that was a desktop version called Business Plan Pro. Some of you may have used it or be familiar with it. A few years ago, they went to completely online cloud version, and it's very easy to use. And I'm not affiliated with them in any way, but it's just a tool that I've used, and I do like it, and it's very easy. If you want to mess around with it, they have like a 1-month free trial. So it's easy to mess around with. And actually, because they did a webinar, the CEO of Palo Alto, Sabrina Parsons, she did a webinar just kind of at the beginning of the coronavirus. And I'm actually going to play a chunk of that, because she does such a good job of showing the types of variables that you can incorporate into your what if scenarios. So I'm going to play a portion of that just in a minute here. QuickBooks is a great tool for doing your what if scenarios. So if you're already using QuickBooks software, it's the #1 software in the US in terms of the number of people using it for business bookkeeping and accounting. If you're already using QuickBooks, that's a great starting point. And it works great with Excel. In fact, I'm going to show you how to use QuickBooks in tandem with your Excel to create those what if scenarios. And then, if you're really old school, you can just use pencil and paper. Just get your calculator out and, jot some stuff down. Have an eraser on your pencil. You can just do it that simply. So actually right now, I'm going to get out of this, and I'm going to go into that webinar, and I'm going to play that for you. And we're just going to play a few minutes of it. This is already in progress. So what you're seeing here now is a screenshot of Live Plan. And again, this is the CEO, Sabrina Parsons, talking about creating what if scenarios and how you can use that in Live Plan. And after we listen to this a few minutes, we'll hop out and we'll look at how you can do it within QuickBooks.
Actual results. And then you can compare them to your plan. And that's what I'm going to talk about right now. This is what you all should be doing right now. You should be absolutely thinking about, how am I doing and what did I plan to do and how am I going to react? So what I have right now is a gym forecast.
Oops, sorry.
Fiscal year 2020. And if you look at that, I'm actually going to go to the revenue area of this gym forecast. And I'm going to hide the instructions. So I'm going to show you how to do that. So now you guys are all looking at my revenue. I have my club dues. I have fitness class income. I rent some conference space. There's some event income. There's private training. And then this gym sells some logo wear, sweatshirts, t-shirts, exercise pants with the logo. Small business, not a big business. You can see the total revenue for this fiscal year 2020 that we're in right now is $500,000. So this is not a $10 million enormous, multiple location, franchise, gold gym type of gym. This is a smaller mom and pop gym. And I wanted to pick a business that people could understand, and I also wanted to pick a business that clearly is going to face some financial uncertainty right now, when a lot of people are staying at home and not going to gyms, and gyms are feeling like they may be already told they are forced to close, like in California, or maybe that's just what they're doing in order to protect their employees and their customers. So it's a good example. Obviously, restaurants, bars, there's lots of different businesses.
Okay, I just paused it a second. Is the audio okay on that? Is it coming across all right?
I'm hearing it.
Okay, thank you. I'll just resume it. Thank you.
That are feeling the pain right now, the uncertainty. Are customers coming? When are they coming back? What am I going to be doing? So that's why I picked this. I'm going to show you what happens with this plan and how I can actually look at different scenarios. So you're looking at this revenue here. Here's all the revenue that we have. I'm going to jump over here. You see the financial tables, and those are all under here. But these are actually the projections business is doing. This is the current plan. I'm going to make the assumption that all of you have a current plan. So number one thing is, if you don't have a current plan for this fiscal year, this is an absolute necessity. If you need to understand how to create a current plan and you need a little bit more help with that, make sure that you either tell us right now in the question area or respond to the email that will have this recorded webinar, because we can do a specific how to make your plan webinar and teach you step by step. This is not what this webinar is about. What I'm going to teach you today is how to think about your business and create different scenarios. So we're in our profit and loss right now, and in last time in profit and loss, you can clearly see that I can see all my revenue. I can click on this little arrow, see all my direct costs. I can see all my salaries and wages, and really get a big picture sense of my chart of accounts and what my business is planning to do. What I planned last year in fiscal year 2019, what I'm planning for this year, and what my plans are for next year. Now, given the situation, probably not going to happen. And this gym is not doing so badly. The owner is not making tons of money in salary, and it's actually a husband and wife owner duo.
Okay, so I did have a comment that the audio maybe isn't very clear. Are others feeling that? Is it hard to understand what she's saying? If it is, I don't want to continue with it.
It's just a little muffled.
A little muffled. Okay. So we'll just quit that because it's a good example, but I'll just kind of give an overview of what she's saying. If we go back here, if you look at, looking at the screen, you can see she's got different categories of expenses and different categories of revenue. So what she's going to end up doing, okay, for instance, here in the revenue, she's got like club dues. So she shows how in this tool you can go in and adjust those club dues in various months, very easily just adjusting that revenue, and then you can see the bottom line, what impact that has on the net income for the year, and also then you see it by month, so you can see, is there a negative? Is it a negative cash position? And it's very simple using this tool to go in and out of each of these revenue categories and expense categories, make those adjustments, and immediately see that changed bottom line. So that's kind of what she gets to. It is a great example. I'm sorry the audio isn't better. I was afraid of that, but there really wasn't a better way of sharing it. That's basically what I had. So we'll just dispense with that. I think you get the idea. And instead, we're going to show in QuickBooks how you could virtually do the same thing. So again, if you are already using QuickBooks, that's the perfect place to start. If you're not, you may have some other accounting or bookkeeping solution. Start with what you have. And I think you heard her say, if you don't have financial projections, you absolutely should start with that. You need to get that set up if you don't already have that. I'm sure many of you already do, but okay. So where we start here, and this is a sample company file. So I'm just going to show you, this is a sample company that also has products. So you'd start out by looking at your reports menu, and you see I've got that highlighted here with my mouse. I click on reports, and you go to company and financial, and then go to profit and loss standard. And that's going to pull up the profit and loss report. Now, with that open, I'm actually going to change my date range to this fiscal year. And certainly you can set your date range to reflect, you can reflect perhaps January through March. or this fiscal year, or you could set it to look at last year and use that as a starting point. Either one. Either one would be valid, and there might be reasons to do one over the other. But once you get your date range set, and that is up in the left upper corner here, you can change the columns. You notice right above where it says profit and loss Rock Castle Construction, there's a field where you can change the columns. So instead of total only, we'll change that to month. Because what that's going to do is it's going to give us the monthly detail. And when we talk about cash, we do need to understand what's going to happen each month. Because we live day by day, month by month, we don't live a year at a time. We do need to understand the whole year, but we do need to understand the monthly basis. So here we have the profit and loss for this company. And you'll see they've got set up several income categories, cost of goods sold, several expense categories. It's a pretty big list of accounts. But I'm sure many of you have something similar. So the next thing that I would recommend, there's actually a couple things you can do in QuickBooks. If you go to your company menu, there is a place to do planning and budgeting. However, I don't particularly like using the budgeting tool in QuickBooks. It isn't great. I mean, especially for what if scenarios, it doesn't, it's not as smooth and as flexible as actually exporting it to Excel, which is what I would recommend and which I'm going to show you how to do. So instead, we're going to export it to Excel, and right above the title of the document here, and just a little to the left, you'll see the Excel tab, and you can create a new worksheet in Excel from this profit and loss. And so that's what I would recommend doing. So we'll give that a try here. And what would you like to do with this report? Create a new worksheet, and then in a new workbook, we'll hit export. So shortly here, Excel is going to open. We'll give that a chance to open up. So here we have it in Excel. And I'm going to increase the size of my screen a little bit here in my view. So it's, the same numbers, but now it's in Excel. And we've got, if you scroll to the bottom again, you see the net income month by month. And that's the thing we want to watch as we're creating these what if scenarios. So first of all, we might want to give this a name, and we might want to call this, we'll say file save as, and we're going to call it worst case. You can call it whatever you want. But by giving them different names, okay, to continue saving. All right. So, and I'm getting an error here, but we're just gonna ignore that actually. So I don't want to deal with that right now. But give it a name and call it whatever you want. But this gives you, as you save it with different file names, you can create different scenarios reflecting different variables. So let's say in this business, you see the design income line. I've highlighted it here. Let's say in March, we know that got cut in half. So we just change that. Let's say April, it went down to 0. And we're projecting May is also going to be 0. And let's say June, we think is going to go up to about half. You kind of get the picture here. And then let's say July, we think is going to be somewhere coming up a little bit. And August, we think is going to be the same as what we had last year. So that would be kind of showing a curve. And then that is going to change our bottom line a little bit. So our net income at the bottom is down. You can see here in April, we're down to 1,900. But let's say that isn't it. Let's say our labor income followed the same curve. So let's say our labor in March went down to $7,500. And it's going to be, it was 0 in April, and it was 0 in May, and in June, it's starting to come back a little bit. And then in July, we're going to be doing more labor again. So then as we scroll to the bottom, you see what's happened. Our net income, now we see that really, really made a difference. I'm just going to put a fill on that so it's easy to see. And I'll enlarge that a little bit. So now we have negative numbers in March, April, May, June. So those are the numbers we see. We need to have enough cash to mitigate that or to get over that. Now, what else can we do then? Are there some expenses that we can cut back? So that would be the next thing to look at. Are there expense categories that we can cut back? So let's say we cut back our wages. Maybe we did lay off half of our staff back in the mid-March. So let's say that's 4,000. And we completely cut in April, and we completely cut in May, and we're bringing half staff on in June, and in July, whoops, and August we're full back. So what does that look like? So now you see that the numbers aren't as negative. They're still negative. So this would indicate still that there's going to be a negative cash position, possibly, depending on how much cash this particular business started with. If this business started with 20,000 of cash reserves, they probably don't need any additional cash to get through this. But if there wasn't a lot of cash reserve, there would be the need to get some additional cash, whether it's through maybe the Paycheck Protection Program, economic injury disaster loan from SBA, or maybe a line of credit at the bank. So there's different ways of doing that. So now this might be, for this business, this might be a worst case scenario. The other thing that, and just in the interest of time, I'm not going to go deeply into it, but are there other income, other revenue tracks? So if we're looking at a new business model, is there a way of, for instance, with the design income, is there a way to offer design virtually or online? So maybe this business is going to add an online design service that they bring on, and maybe they have some ideas around marketing and launching that and customer engagement that's really going to take off, and maybe it would be something that would really be a game changer for this business. So that would be another potential scenario. And if you save each of these, when you do your save as, if you save each of these with a different name, it gives you the ability to create multiple what if scenarios. What if this happened? What if that happened? And it can be about timing. It can also be about business model changes that create new revenue sources. So that's kind of how you would do it in Excel, starting from QuickBooks. So I'm going to hop back in here. And so this is just an example how we're going to go from super complicated, sophisticated to super simple. But we talk about doing a napkin test or whatever. This is sort of the equivalent of that, and this is just very, 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 very basic, where you just kind of see, and I just broke this down by quarters. So this would be a scenario where the business, had 30,000 in sales first quarter. They had cost of goods sold of 18,000, so a gross profit of 12,000. Whoops. Payroll of 6,000, rent of 3,000, so they had total expenses of 9,000, and net income of 3,000. Quarter two, sales dropped, and you can kind of see how that played out. and they ended up with net income of minus 3,000. Quarter 3, things are starting to come back, but still a net income of minus 3,000. Quarter 4, back to quarter 1 sales. So you can kind of see how that played out. But again, in this example, if this business started out with a decent cash reserve, they might be able to get through this without any additional financing. But if they didn't have enough cash reserve, they might need to be looking at some ways to get some additional cash into the business, either through sales of, a new revenue stream, which would speak to a new business model, a new revenue stream, or through cutting more deeply some of the expenses. And of course, this is super, super, super simplified, but you get the picture. So with that, I'm going to open it up for questions. If anybody has questions, I think I'd welcome any questions you might have, and I'll do my best to answer them. I hope you see the value of doing something like this. I think the danger is to just do nothing. But I think financial projections are very, very powerful tools. They are just projections. But as a business owner or manager, you're in a position right now to think about those what if scenarios. And you can put yourself in a better position going forward. So any questions?
Michelle, this is Drew. I know it's we're kind of already in the thick of this whole COVID-19 chaos, but what recommendations do you give business owners when it comes to having cash available? Because like you said, cash is king before crisis comes about or unexpected life events come about. Because I know, I don't mean this in a negative way, but banks love to lend money to people who don't need it. When you do desperately need it, that's not when they want to give it to you. So what recommendations or planning situations do you usually recommend in those for business owners you work with?
Well, that is a very good question. The sad thing is we are in the thick of this, so we don't kind of have the luxury of going back and figuring out how we could have been better positioned. So I would say one of the most important things is to have a firm grasp on your financials. And having worked, I've been a QuickBooks Pro advisor since 1990, a long time. And so I've worked with a lot of businesses in QuickBooks software. And I know that a lot of businesses, it's a struggle to be on top of their financials, and they maybe aren't on top of their financials. But I would say, get familiar with your financials, with your profit and loss, with your balance sheet. Try to get a firm handle on all of your revenue sources and your expenses. Just from a solid business practice, understanding what is making you money and what isn't. I think that's probably the best advice. Now we are where we're at with this thing. And if you are in a position where you don't have a solid grip on your financials, I would say, please get familiar with your financials. And if you don't have projections, you need to have some projections and work on those. There's a lot of tools, like I said, to help you do that. There is LivePlan, there's QuickBooks, there's the desktop version and the online version. Those are great tools. The Small Business Development Center, and I know we have Christine Anderson on the webinar this morning, they help businesses with projections all the time. And their consulting services are available at no charge. So I would recommend that you get some good solid projections. And as we talked about this morning, maybe make some different variations of those projections with some different assumptions. And I can tell you, Advanced Thief River, my board has backed me to work with businesses in the Thief River Falls area one-on-one. So if you want some help getting some projections put together, I'm here to help you with that, and I would be more than happy to help anybody in the Thief River Falls area with those projections. So So there are tools and there are people to help you with those tools. So that would be my biggest suggestion, Drew. And then second, you know, once you have those projections, and if you've identified that you are going to be short on cash, it's figuring out where to get that cash. And you know, as you alluded to, sometimes when you really need the cash, it's hard to get it because banks look oftentimes at people with good credit. You know, they look at your credit score and so forth. Right now, there are sources through the Economic Injury Disaster Loan with SBA, and certainly the Paycheck Protection Program. There are some sources that are available to more businesses. They've opened it up and they're willing to take more risk. But if you're not able to get any financing, there are some things you may be able to do just by adjusting your business model. So that would be the next thing that I would look at.
Absolutely. So, and I know, I think one of the interesting things for many people is we forget that this happened. It's going to happen again at some point, not in the same way, but 08 happened, you know, 10 or 12 years ago. And 2002 happened before that, 92 and things like that. So I guess, do you recommend people taking home equity lines of credit or business lines of credit even when they don't need them, just so it's available?
Well, I think
That's something you like to wait on.
yeah, I think a business line of credit is a good thing to have, and it gives you the ability to have that cash if you find you need it. But the word of caution is to really use it as a line of credit. A line of credit is not meant to be a long-term finance method. So you don't want to, you know, if you've got a line of credit for 50,000, you don't want to max it out to 50,000 in the first month and then have it sit there for 5 years at 50,000. That's doing you absolutely no good. A line of credit is meant to be dipped into and paid back, dipped into and paid back in just a short fashion. So if you need something that if it's going to be something that you're going to have a balance that is going to sit there and you're not going to be able to pay it down, you should really look for some longer term financing tools, because the interest rate is usually higher on those. So because they're typically not secured, so the banks have to have a higher rate of interest on that. So I would suggest only using that for very short term use, but it is a good thing to have in place, definitely.
Yep. Absolutely, that's what I was kind of getting at, because it's hard to open them once the chaos is started. But if you already have it available, it's a lot easier.
Yep.
I guess so. That's what I was trying to get your perspective on what you recommend there.
We have other questions. Any comments? Get a quiet group. Well, I hope you see the value of this. I hope you see the value of the what if planning. I kind of think it's a must right now. So I highly recommend everybody to take a look at that. And again, just tools for you. Look at the tools that you've got, and also people to help you with those tools. And again, I'm available to help, and I know that we have others that can help, including the Small Business Development Center consultants. So with that, unless there's any more questions, we will. All right. Comment from Christine Anderson: creating an emergency fund will help. Yeah, so now are you meaning the emergency loan program that was created in Thief River Falls?
Morning, Michelle. I guess it's probably easier for me to just explain it.
Oh, I think I get what you're.
Ignore my bad hair today, but so creating an emergency savings account going forward, even if all you can put in to start with is $5 or $25 into that emergency savings account, will also help you to prepare for the next time. It's not really going to help this time, but it'll be a good thing for next time. And you know, the Dave Ramsey process for your personal home life works really, really well for businesses as well. And if anybody needs any help with anything, the SBDC is here to help you. And again, like Michelle said, it's at no cost. So, but think about creating that emergency savings account. I think that'll be really something that will benefit you when the banks aren't ready or able or willing to give you a loan.
All right, thanks, Christine. That is a great idea. All right, well, thank you, everybody. Again, we encourage you, if you're not a member of the TRF Strong Facebook group, to join as a member. We'll continue to put information out there. And we are really interested in providing information on these webinars that is interesting to you. So please, please share your ideas with us in terms of what you would like us to share for the next webinar. Thank you, everybody, and have a great day.
Thanks, Michelle.
Thank you.